This is the Stock Trading Reality Podcast, episode 133.
It was just like I could not do any wrong. I just opened my account. I'm just going to keep going.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. He wants to sleep on your couch. He's done it before. Play trader.
Yeah, as long as you are not a creeper or like a serial killer, then I will come and gladly sleep on your couch and mooch off of your kindness in the sense of giving me a free room and board. And that's what I've done, or that's what I do in Baltimore. There is a friend that I have there. That's what I plan on doing in Denver one day after our co-host Ches gets his house built. But this is definitely an unintended consequence of starting the community. I've been traveling the country. I plan on continuing to travel the country and save a few bucks because, believe it or not, as creepy as it sounds, but meeting people in internet chat rooms, there are like normal, rational, sane people. And it's pretty neat to have the opportunities that I've had and will continue to have, assuming that people allow me to mooch off them. So yeah, if you're in a big city, really any city for that matter, it doesn't even have to be big city, and you're willing to let me and probably IT Nate and whoever else is showing, just mooch off your furniture, then we're all for it. So Ches, would you let me mooch off your couch after you get the house built out in Colorado? Because that's my current plan.
You're paying the Airbnb rate, so I'm thinking $150 a night or something to sleep on a couch. Yeah, I think that's a good business opportunity for me to rent out my couch. But yes, you are more than welcome to stay in any number of places on the property.
Excellent. On the property. I don't like that little footnote. I feel like, yeah, you see
say,
that outhouse over
outside.
there? Yeah, you see that outhouse? That's what I meant by anywhere. So I see
anywhere
the game
in the
rep
house, in the confines of the home, you have permission to stay there for sure.
Excellent. And if you require payment, I will do so in penny stock shares, which I know that I'm good for. So I mean,
per usual.
Yeah, per usual. So anyways, but yeah, shoot us a message if you're willing to host me and Ches and IT Nate, and I don't know, maybe we can do a podcast together as we hang out on your couch. That maybe sounds a bit creepy, but I didn't mean it in a creepy sense. Anyways, let's move on. We have an awesome guest today. Roland is his name. He goes by RoboTrader15 in the chat room. And I told him this at the end of the interview, and I don't feel bad because I know where things ultimately head. But he started off like I did when I got into trading, and that is just like a clown. Like, it was a clown show up front, and like I said, I say that not to be mean to the guest, but I say it because I know where it turns out, and like I said, there were many things, especially with commissions, which you'll hear, which really reminded me of my journey when I first got into the markets. Ches, and I want you to comment on this real quick before I get started, but talk about somebody that starts at point A and point Z is a whole lot different. I mean, pretty amazing journey, wouldn't you say?
Yeah, absolutely. And I kind of mentioned it too in the podcast that it's just a literal 360-degree spin around from where he started to kind of the proficiency he has now, like towards the end. It's an awesome story. It really is just a story of persistence and hard work and kind of working through the hard times. So yeah, it was an awesome podcast.
Okay, this will fit in perfectly because there's a lot of engineer talk, but I'm going to engineer and nitpick mathematically what you just said. You said he took a 365-degree turn.
So he ended up back at the start.
Yeah,
so he did a complete 180.
There you go. And this is very contradictory because towards the bottom or the end of the podcast, you claim to be an astronomer, yet you don't even understand rotations and stuff. So
I'll let the listeners decide that for themselves when they get to that point.
Yeah, we'll go Rome style and just wait for the thumbs up or thumbs down. So, anyways, without further ado, let's hear from Roland. Roland, welcome to the show.
Oh, glad to be here, guys. Thank you for having me.
Yeah, thank you for taking some time out of, I don't know, where are you, Roland, geographically?
Right now, I am in Oxford, Connecticut.
Okay, so you're in the Eastern time zone. So with that, thank you for taking some time out of your evening to do this. And Ches, what are you, 2 hours behind us Eastern time zone folks?
Yep, just about 5 o'clock here.
Okay, so I guess pretty much evening for us all. So thank you for spending your evening with us there, Roland. So now, your name is familiar, but I'd be lying if I said I knew exactly how long you've been around. But I feel like you've been around the community for at least a year and a half, couple years. How long have you been around for?
I think I started back in 2000. I bought CTU last year, 2016, but I was kind of hanging out as like one of those freeloaders in the chat rooms. I think I started in like November of 2015. That's when I first joined claytrader.com.
Okay, all right. So my memory isn't as foggy as what I thought of, but I figured you've been around for a while. So good. That's a little confidence builder for me in my memory as I age day by day. So, anyways, we'll get this party started with the question that you know is coming your way. But where do you hear about the markets, and kind of what was your impression of them, and what eventually got you interested enough to maybe not put money into the markets, but want to pursue learning more about them and taking it more serious in a hands-on fashion?
I don't know if we want to start way back, but when I was in college, I think it was junior year, and I had a Fidelity account basically given to me by my uncle that he had started back when I was a kid, like a baby or whatever, just for like, I guess, retirement or something. And that was the first time I ever got introduced to the markets. I think the first share I ever bought was, I think I bought 3 shares of Coca-Cola back in 2012 or something. And I held it for like 3 months, and I sold it, and I think I took a loss on it because of commissions. But
yeah, I wouldn't doubt that too, especially kind of trading that size at that time. But no, everyone's got their introduction somewhere. So now, after kind of you got that account, did that trading, and essentially, even slightly having a bitter taste in your mouth about having to take a small loss, pretty much because you had to overcome probably $10 each way commissions. It sounds like if we're having this conversation years and years later, something must have piqued your interest. So did you kind of keep up with that account that you had gotten, pretty much given to you, or were you just trying to buy staples like Coca-Cola, Ford, or anything like that? What was your process at that time?
Well, I took a break. You graduate college and then you try to find a job. I guess that's where life took me. And I'm a civil engineer by education.
Yeah, engineer.
Yeah.
About time we had another engineer back on here.
Yeah, it seems like there's a lot of them.
We have engineers every week, Clay.
And that is not by coincidence.
No. So I think it was 2014. I graduated, got my first job. A year passed, and I switched jobs and got a more desk job with engineering. And I was thinking about other ways to make money, I guess. And my dad, I ended up talking to my dad, and he's like, because he's a finance guy by background in college, and he said, "Oh, all the money's in the market. That's where all the money is. That's where how much money's traded every day in the market." I said, "Huh. Well, let me take a look at that." And from there, I just got into it, more into it, and eventually now I'm here talking to you guys.
So let's backtrack a little bit. You bought those Coca-Cola shares, you sold them, and was that it for that account? You literally just didn't do anything with it anymore?
Yeah, basically, yeah. It was basically just a mutual fund account. I don't know, it was like some blue chip fund or something like that with Fidelity. So I didn't really touch that. I just saved up some money and opened up a different account with, I believe it was Options Express.
But this was years later, right?
This was 2015, the beginning of 2015.
Okay, so I just want to make sure that you weren't still kind of trying to fool around with that Fidelity account or anything. It was pretty much you tried it with Coca-Cola, you sold it for a loss, and you put it on the back burner until, like, you brought us up to speed. Then your dad said, "Hey, all the money's in the market," and that piqued your interest. So your dad tells you all the money's in the market, and in your words, you got interested again. That kind of sparked things. So what was your method of research at that point in time? How did you go to learn more about the market?
Okay, well, he said that options are a great way to make money with a little bit of money, like a lot of money. Buying calls and puts and all that other good stuff that with options.
It's got some nice leverage for sure.
Yeah. So I was like, huh. So I looked into that. I did some preliminary research on, I think, maybe Investopedia and other sites like that, like StockTwits and all that stuff, and just kind of learned on.
StockTwits, real good.
Yep.
Yeah, good source there of information for sure.
Yep. So just kind of learned by myself for a little bit, just from online resources, and just kind of got
so there's kind of two methods that people generally find about kind of trading in the market or getting involved in the market. One of the ways is fundamental analysis, find companies that you like and think are going to grow and buy them and get into them and sell them for a profit at whatever time that is. And the other way is using charts and technical analysis. So I'm going to venture to say, you being an engineer, because Clay cherry picks all the engineers out of the community, I want to guess, but correct me if I'm wrong, you were focusing more on the technical analysis side in kind of your research online?
No, not technical. I didn't even know what that was until
Ches.
Yeah.
How about them apples?
Well,
so you picked an engineer who didn't look for technical analysis, Clay. Good job out of you.
I got to keep you off balance, man.
Well, it's always you just go word of mouth, like, oh, hey, Apple's a good company, right? Yeah, okay, buy Apple. Or big blue chip companies like that, Home Depot or whatever, like, oh, that's a good company. That was kind of my preliminary understanding of stocks and stuff like that, is like word of mouth, like, oh, it's good, listen to what everybody else says, like the pundits and stuff on CNBC, and just kind of go along with that.
Word of mouth for you, was it just TV, or was word of mouth coming from StockTwits and social media?
It's just like personal, like Apple. Everybody has Apple, so that must be good, right? Stuff like that, like Verizon. Everybody has a Verizon phone, right? So must be good. That was basically how I kind of started my preliminary research with companies and stuff. And I would just look at maybe like a line chart or something, like basic on Yahoo Finance or something, and that's how I kind of, I guess, made.
Okay, so it's not like you were, okay, I'm going to follow this person on StockTwits or Twitter or whatever, or some message board and whatever. It was just more of a general consensus type thing. Now, were you focused on stocks, or were you doing options? Because your dad had brought up options. You had already mentioned, you opened up an Options Express account. So what exactly were you using this account for?
I think I was like, well, like you said, all the money's in the market. So I was like, oh, if I can figure out how to do this, I can probably make some money, while working, and then it'd be like two incomes or something like that. So
that's always kind of the goal. So
yeah.
So were you buying options in these companies based on word of mouth, or were you buying shares? I know your dad had recommended options. So were you buying options at that time?
Well, this is kind of like what threw me into the market, what got me super interested in the markets, which piqued my interest and has not stopped me since. Basically, when you start with any account, you can kind of get a dummy account going, and with that first account, they gave you $25,000 just in dummy money, right? So I think what happened, this is what happened, but I remember one day I was like, let's see. Apple's a good company. Like I was saying before, Apple's a good company. It just keeps going up and up. So I'm just going to buy as many calls as I can, because when you buy a call, you're bullish on that stock.
Right.
So I bought a bunch of calls, and then I don't know what happened. I went to bed, woke up the next morning, nothing really happened. So I was like, oh, okay, I'll just wait on it a little bit more. And I think when I went to, next day, 2 days later, something like that, I look online. I go to my Options Express account to sign in. I'm saying, oh, what happened? And it says plus $45,000, and I was like, what? I was like,
was this earnings or something? Or
I don't know.
happened?
I can't remember what exactly happened, but I was like, how is that possible? I was like, that is insane. How do you make that much money in such a short period of time? And I couldn't believe it.
This was your paper account, though, right? That dummy money? Okay,
yeah.
okay.
That was the dummy money. And then I went full bore into it. I just spent all day researching options and stocks and, what analysis and what is technical analysis, what's a candle chart and all that stuff, and what's a doji and learning all that stuff. So that really threw me into the whole technical side of trading and trying to really just get a grasp on that stuff.
The market as a whole, or just technical analysis at that point in time?
Just trying to, I guess, understand, like stocks or stock behavior, I guess, or technical analysis. Just learning and then I found you guys, or claytrader.com, and I got some books on trading, just fundamentals like that, and they kept mentioning technical analysis and bar charts, bullish, bearish. I tried to learn all these terms on my own, and I got a pretty decent, I guess, free education just from reading books and using online sources. But everything kind of seemed jumbled and couldn't really get a good grasp on anything.
That's jumbled. That's a great word, because of course, Ches and I, we would love to, sell you one of our training courses. I mean, we're never going to hide that fact. But to be fair, yeah, there's all sorts of free stuff out there. But as Roland just said, yeah, it's free. There's a ton of stuff, but that can bring about the quote unquote jumbled feeling. So I just want to make sure I understand, though. You opened up. Hey, let me ask this: had you bought any books or anything before you bought that Apple, all those calls?
I think I bought one book. It's by I don't know if I can say it. It's by Mark Douglas. It's Trading in the Zone. I don't know, just one of those books.
That's on our resource page. So yeah, that's definitely a good book. Okay, so I guess the point I'm trying to make is it sounds like you kind of had like maybe a toe in the water of interest of the market. You're like, yeah, I'll pick up a book, and it was pretty random, and then all of a sudden you saw the potential. Mm-hmm. And it sounds like at that point, like you said, that's what really just took things to another level, where it went from a toe in the water to, is it safe to say you pretty much just jumped in with both feet? Right. Yeah, entire body at that point in time?
I was like, this is awesome. Like, I was just so excited. I was like, this is awesome. Like, I never would have thought that was possible.
That's really interesting. I don't know. I appreciate your honesty, because nothing personal here, but it sounds like you're kind of half-assing it at first. You're just like, yeah, whatever, I'll do this. I'll just buy a book. I'm just going to randomly buy Apple calls. And then all of a sudden you decided to get serious when you saw the potential. Is that kind of, you were maybe just going 25% effort at first, if that?
Right. I wasn't really sure what I was doing, I guess. When you first...
And it sounds like you weren't sure even what the potential actually was. Right. Is that fair, too?
And I could have lost, and I know, looking back, you could have lost everything. It could have wound up zero.
Exactly.
So
that is true. So if you would have lost everything, we probably wouldn't be here talking, because you would have probably been like, well, screw this. This sucks. I don't want to.
Yeah. Like, what happened?
I don't want to flip a coin.
Yeah, right.
Yeah. So, all right. Well, okay. That's pretty interesting. I don't know. I'm trying to rack my brain, but I think that's a pretty unique case where, because it seems like a lot of people just are going full bore into the market, but you're kind of just, tiptoeing a little bit, and then all of a sudden when you saw the potential, what do you remember what you locked in the gains was? Did you lock in $45,000 of the? Now, of course, this is just that fake money, but what was your final profit on that Apple's trade?
What was it? $25,000 account. Bought as many calls as I could. So, I think the ending balance. I don't know if it was plus. What's 25 plus 45? Is that 70,000? 80,000?
60?
60.
That's or 70,000,
right?
70.
Yeah, that's 70. What it was. It was 70. It was like 73,000 and change or something like that. But still.
Okay, yeah. So you made about $48,000 on the trade. So all right, that totally makes sense. While all of a sudden that lit a fire behind you, and you're like, I got to figure this stuff out like
Right.
legit me. So we'll fast forward back to where you were, and you would use the word jumbled. You had been going all these free routes, several books, but everything still felt jumbled. So what did you do at this point in your journey to try to de-jumble things, if you will?
I guess I just did try to learn some more on my own. And then, of course, through Instagram and stuff, you see a lot of other people who do. So I started following a lot of people who were traders, and they all have these courses and stuff that you could buy and all that good stuff. But so then I got into like, let's see. So I start.
Well, before you even go further, I think I want to kind of loop back a little bit, because you essentially, I think it's interesting, just like Clay said too, you had saw the potential based on a trade that you had actually taken. So usually, Clay, correct me if I'm wrong here, most of the time people will see these Instagram traders or these Twitter traders or these live YouTube videos or whatever it is. They'll see that first and then go, ooh, I want to do that. But Roland here, he's the one who kind of put the trade on, saw the results of that trade, and was like, wow, that kind of led him. And now you're kind of going into, oh, let's explore what other people are doing and stuff like that. So I think it's interesting how you kind of discovered the potential on your own versus, you didn't say you saw this guy day trading on YouTube and made $1 million in 4 hours or something like that, because that's generally what hooks people. But I think it's really unique that you had discovered that yourself, whether by dumb luck or however it may have been. But yeah, so now you're getting into kind of the financial side of Twitter and Instagram and stuff. And did this lead you to kind of say, ooh, I should look into how this guy is doing this, or were you still kind of in the I'm going to learn how to trade, I'm going to figure this out with books and online resources, or at this point had you already kind of saw that Clay teaches essentially how to read charts and stuff like that?
Well, I didn't find Clay till this past last 2016 or 2015. It was like December or something. But if we backtrack before that, I was just basically trying to learn myself. Just by learning what other people do, obviously there's a whole bunch of penny stock people and stuff like that who, I bought, whatever, some stock at this price and it shot up to $2 or something. I made, pull out 900% profit or gains or something like that. So there's plenty of that, on the internet. So I kind of gravitated towards that, and I had a smaller account. So I started putting in real money at this point. So I think I had like $6,000 to play with when I first started, and I know one of the first big trades that I had was I forget the name of it, but I think everybody was trading it. I wish I could. It was like PT something, and it went from like $2 to like 80 or whatever 2 years ago. I'm trying to remember what it was called, but
$2 to 80?
It was something. It was a huge gainer. It was insane.
PT, yeah. So what led you to this stock in the first place? Let's just start off with at the get-go. Whatever this stock was, how did you even find it?
I think I'm trying to think.
Like, was it through stock Twitter or message boards, or were you just running some sort of scanner and you saw, oh look, this thing's getting a bunch of volume?
I actually don't remember how I found it. Man, I wish I knew. I don't know. Yeah, I don't know.
You just remember it was a big gainer,
yeah. Everybody was trading it. I remember. I may have been. I think I was in Clay Trader at this time. It was August of 2015. 2015. I think I was part of Clay Trader, but just as the $99 inner circle.
So maybe you came across the ticker
so.
symbol in the chat room.
Maybe
then.
somebody somebody said something like, "Oh, this one looks," or something like a lot of volume or something like that. Some kind of alert like that.
Okay, so how did this trade actually go for you? Did you buy it $2 and sell it for $80?
No, at this point, I was using my Fidelity account, and I think I bought as much as I could. So I don't know. It was like I think I bought maybe I didn't. I think I bought 1,000 shares at $2. So, and then it went up to like 3, and I locked in profits, and then it went up to 4, and I locked in some more, and then at like $6, I was like, I knew the whole let your winners win and cut your losers, so I think I sold everything at 6 because I put in a stop loss and it hit my stop loss, and then the next day or the rest of the day it just kept taking off and taking off and taking off. It was one of these low float.
I was just gonna say low
Yeah.
float, just kind of goes
Yeah, it
nuts.
was one of those.
Probably highly shorted
Yeah, it was
or something.
it was a biotech or something like that.
Ah, yes. So all the ingredients there for a massive
Yep,
mover.
yep.
So, but I mean, if I would still consider that a good trade. Sure, maybe you broke a few little rules here and there, but you put in a stop loss. Your stop loss got hit. So from that point, it's essentially just hindsight trading. So. Walk us through your mental state at this point in time. Were you king of the world? Did you have this whole trading thing
King of
figured
the
out?
world. Yeah,
I mean,
I could do no wrong. I think I made $1,800 in like 2 hours. I was like, well, I'm done for the day. Like everybody else says, I'm done for the day. So
Yeah, and you're just gonna do it every day
Yep.
for the rest of your life, right? That's exactly
that's how
it goes.
easy it is.
and so how did things go from there? You're feeling top of the,
Yep.
king of the world. And I mean, do you remember your next trade or just the next kind of sequence of events as you're in your new man mode, feeling that you got it all figured out?
Yep, I think the next day I saw something else like that, another penny stock or something. I bought 1,000 shares, and guess what it did? It just kept going down and down and down, and I ended up losing like $900. And I was like, oh, what? I was like, oh man, like.
So how much did you make on the trade before that, where you'd kind of got that huge?
Yeah,
mover?
it was like $1,800.
Okay, so you gave back 50% of your gains. So first off, kudos to you for not literally writing it down and wiping it all out. But was this a wake-up call, or was this you're going to look at this as a moment where, one of these trades I took didn't work out, I'm still up, my account's still up, and I'll just go into the next day? Or was this kind of a slap in the face that, maybe there's some risk management stuff that I'm kind of lacking?
Right, there's definitely some risk management stuff lacking. And then I was also, talking with some other people, like it's kind of like greed talking, like and just the ego, that everybody has is like, when you first start, it's always I can't be wrong. No way, it's gonna keep going. Can't be wrong, and then
and it's totally cruel because and we've talked about this many times too in the past. In any other profession, you learn how to do the profession, and then generally you get better at it over time, and there's not like these... Clay, correct me if I'm wrong. You wouldn't get, say, work through 3 promotions in your job, and then there's no stop losses in jobs, get totally demoted back to like step 0, right? Like you just graduated out of college. Like it doesn't happen in the real world. But in trading, it's the one place where you can do all the homework in the world, but the thing is that nobody knows what's going to happen next. No one knows if a stock is going to go up or down. The only thing we can do is play the probabilities and the odds, and it's just, I think it's a lot of people have difficulty, and it's definitely me too. You can put in all the time in the world and say, this is the picture perfect bull flag that I want to, go long, and it's going to triple in price. And then it goes up a little bit. You're so happy it's working. And then bam, it just completely flushes on you. That's the kind of, it's very frustrating. I think it definitely plays into that ego that you kind of talked about, with the fear and the greed, about how, no, I did all this work. It's supposed to go up, but it's just going down and down, and you just keep holding. It's such a cruel game.
Yep.
Yeah, it's cruel, but yeah, and that was actually a good analogy about the job thing. Yeah, usually at work, the more you do something, the better you're going to get at it, and theoretically, okay, so you're going to get job promotions and therefore make more money. But in trading, that doesn't, I mean, you can get really good at it, but that doesn't mean you're always going to be making money. There's going to be losses along the way. Whereas in, a regular job, there's paychecks along the way that are always coming into your account. But I guess my question, because Chess, gave you kudos, and I'm going to give you kudos. You didn't let that $800 get wiped away. But what caused you to just say, you know what, I'm done at $900? Did it finally hit a stop loss, but what made you not? Because we've had plenty of guests that have come on here and said, yep, and then my next trade, it was all gone plus some, but not you. So what clicked in your mind that finally, made you wave the white flag?
I think it was, I was like, I don't want to lose everything that I made, So I was like, I'll stick with something, I came out on top. So I kind of just walked away. And I think I took a little bit of a break just for like a day, just to kind of get back into.
Good. A break for a day. So you talk about passionate. Yeah. Well, you were passionate at this point if a quote unquote break for you is a day. So yeah, that summarizes things, I think, pretty nicely here. So, but really it's as simple as that. And that's sometimes all the perspective we need as traders is, well, I don't want to give it all away. And maybe you think that's just basic thought process, but like I said, there's been many people where I'm sure they're jealous of you. They're thinking and saying, well, I wish I'd have just had that, rationale of, well, I don't want to give it all away. And before they know it, they've given it all away. So, that's definitely some good discipline on your part just to recognize that quicker than, many other people, have when they're first getting started. So, you take this break for a day. So after this long break away from the markets, you came back with a new strategy, or what was your mindset? What was your game plan going in after, this break?
Well, then I kind of went back to options, just because I was buying, like, I don't know, with stock and stuff. Penny. I was always concerned about, I guess, I didn't have a margin account, so I was just trading strictly with cash. So I couldn't get any real leverage. I couldn't be trading, I wanted to trade size. I wanted to make money. That's the whole thing. It's like I want to make a lot of money really quick. So
I was just going to say it cuts both ways, though. That's the thing. It might almost have been a blessing to be on the cash account in the beginning.
So then I got into options again, or back to options. And so this is what really kind of got me just this part here got me into like really just buckling down and learning, taking the time to learn what I need to learn to just minimize risk and really just know what's going on and with certain patterns, what to look for, trends and all that stuff. So, like I said, it started with like 6,000, it came to like 7,000. I put that back into the Options Express account where I could trade options. Even though the commissions are sky high at $15 a trade each way, so yeah,
$15.
I think I asked you, Clay. I was like, I had a winning trade on Apple, but I ended up losing money because it was $30 in commissions. So
yeah, you're starting off $30 in the hole. That's
so
crazy.
I didn't know about that either. I was just like, oh, whatever. You don't really know that when you start out. Or at least I didn't look into it that much about brokers and stuff and fees. So basically what happened was, long story short, I took that $7,000 and I ended up doubling my account at one point. It wasn't realized, it was unrealized. And I was like, wow. So that happened in about a month. I doubled it. And the next thing I knew, I'm back down to $6,000. And I'm like, so that was basically that 1 month. And then I kind of just stopped and I said, all right, I'm not doing this anymore. I need to learn what I'm doing. All right.
Okay, I'm super curious. What were all your positions in? Were you long calls and puts and stuff like that?
Yeah, I was buying calls and puts around earnings. So basically just straight up gambling if it's going to go higher or lower. Just based on, not on technical analysis, just based on rumors and stuff like that. Like, I always, Apple, it's a good company, it's just going to go higher. Twitter's a good company, it's just going to go higher. That's just, looking at what people thought, where it was going, and just kind of listening to them and not really, at this time I didn't know anything about technical analysis or anything, just very basic support resistance, stuff like that. But
Okay, now there's people probably screaming at their iPods or radio, however they're listening to this. Why didn't you sell? You doubled your account.
Right.
So I'm going to ask for them. Why didn't you sell when your account was literally doubled?
greed, I think. It was just like I could not do anything wrong. I just doubled my account. I'm just going to keep going, you know? So, next thing yeah.
And that that makes perfect sense. And for those of you that are like, no,
Yeah.
trust me. And we've had this before. Let's say you're in a trade and your account shows that you're up 5,000, and then your account shows you're up 15, and then all of a sudden it's up 30, and then all of a sudden it's up 50, and then all of a sudden it's up 70. Your mind gets in the mode of, I can do no wrong. The stock can do no wrong. I didn't sell at 15. I didn't sell at 30. I didn't sell at 50. So why would I sell at 70? And then maybe 70 is the point where it goes back down. So the higher something goes, the more, success you have when you're unaware of it. It's like a numbing feeling. And, Roland, to stand up for you, you just were numbed. You, like you said, you thought you could do no wrong. You had doubled your account. So why wouldn't I just double it again? I mean, I'm used to seeing my account go up. Why would I sell something that's successful? So, but that's why greed is so tricky. That's why the market is so tricky, because it's like Novocaine. Greed can function as Novocaine, and it numbs your senses to the fact that maybe this is just randomness. Maybe this is just me being totally lucky. And yeah, in most cases, you got to get kicked in your teeth, and you literally got kicked in the teeth.
Yeah, I got destroyed.
But it sounds like, yeah, that was rough. I'm not gonna sugarcoat it. From 16,000 or from doubling your account down to, 1,000 less than what you had even started with. That is definitely rough. But it sounds like, to your credit, was that the light bulb moment where you said, and it sounds like it was, where you're like, I got to do something different. I got to get serious about this. Was that kind of your aha moment?
That was the aha moment, and I also had to stop because I was buying a multifamily. I was buying a 3-family house at the time, and I needed money for the down payment. So I was like, no, I won't even be able to get this house. I was closing on it in like a month, and I'm trading with money that I need for this down payment. So,
yeah, you're flat out gambling then.
Yeah.
No need to beat around the bush here. That was very risky on your part then. Holy smokes.
I think there's the good story about I don't know if it was John Carter who it was, but they were supposed to do the same thing. They were going to buy like a home for him and his wife. Their first, they're just married and stuff like that. And he's trading with all the money he needs, and he lost it all. And they had to like push back buying this house and all this stuff. And yeah, I mean, you nailed it, Clay. That's just gambling. So it sounds like you closed your accounts and you're like, I can't be doing this anymore, right?
Out.
Sorry, Roland. I'm going to pile on because I think there's a learning point here. Did you know that you were going to be buying this house when your account was at $15,000?
Yes, and I was very excited. I was like, oh,
okay. So you had $15,000 that you could have put even more. So let me ask this: what was the minimum down payment?
I did an FHA loan, so I only needed I think $6,500, and then plus fees. And
okay, that's all I need. That's the only number I need. You needed $6,500 plus fees. We'll call it $7,000. And here you are looking at, wow, I can put not only what I need plus fees, but I can literally double what I actually need. And you still didn't take the gains. And I'm not trying to punch you. I'm trying to use, and thank you for your open and honesty, because listeners, this is how powerful greed is. You may be thinking, wow, I would never get that greedy. Yeah, you keep thinking that. Like I said, Novocaine greed. It's going to numb you, and it's going to make you do crazy things. So thank you for sharing that, because that really just takes up how powerful, how sneaky greed can be.
Roland, I want to thank you for being the punching bag. Not even Clay ribbed me that hard when I did the same thing for my wedding expenses. So thank you for taking the brunt of the blows here.
Yeah, that's good. That's good stuff in a very learning way. So again, in all honesty, in all sincerity, I appreciate the honesty and and openness, because if that doesn't slap newer traders and listeners around a little bit in terms of, yeah, maybe I should really take emotions. Maybe I should really self-audit myself. Am I really having success here, or is it just random chaos and I'm getting a little greedy? So yeah, thank you very much. So you pull the money out of the account for the down payment, and that sounds like it takes your account down
basically,
to zero?
Yep, and I just kind of I just want to reiterate one trade that I had that really stuck in my mind. It was on
Please do.
It was on
Please
Twitter.
Do.
I'll never forget this. And I had bought calls on Twitter about a week before earnings, And I was just looking at what people are saying, and I was like, well, Twitter, it's a budding company. It's pretty new. And if you look at where it is now, I mean, 2 years later, I'm like, oh boy, what was I thinking? But hindsight. So I think I bought calls back in 2015, right around when it was like, it was at 52. I'm looking at the chart right now. It was at 51 in April 2015. So now if you look at that chart, the earnings, it plummeted down to like 40. And I actually added calls to that. I actually added to my position, and I was in the red, and it was falling and falling and falling. And eventually I panicked and got out, and I ended up taking like a $2,000 loss in about a day. I lost $2,000. So that was very painful, and I had to take a break. Definitely, like I had to go for a walk, I think, or something after that.
Yeah, that's one that'll stick with you for sure. And we all have those trades. And if you as a listener don't have a trade like that, it's coming. You're gonna have one where it really just stings, and you'll always remember it.
We're not trying to scare you, but it's just gonna happen. It just until it actually happens, the difference is how you kind of approach it. And I want to see what you feel about this, Clay. If you take it as a learning experience, instead of it's no problem, and then you keep trading again, and then you run into another $2,000 loser, and another $2,000 loser, and another $4,000 loser, and then bam, your $10,000 account just went to zero. The difference is if you like Roland, stop trading, take a walk, take a hard look at what you're doing, and we do. I love how you do the webinars, Clay, in the sense of you talk us through trades first off, but then you say if you weren't undisciplined, your loss is now double. And then we scroll the chart on, and you're like, if you're undisciplined, your loss is now 3 times the size. Those are the kind of things that we want to kind of scare you from making these big losses happen, because it doesn't take much to kind of blow up an account. You really got to be on your game for the risk management. So it's a good thing you kind of use it as a learning experience. You didn't blame the market makers, you didn't blame the shorters or anything like that. It's just a lesson that you had to learn, and you knew, there's something I can fix here in the future so it doesn't happen.
Actually, did you? Who did you blame? That was going to be my question. After this $2,000 stinger,
Clay.
Well,
yeah. Did you blame, external forces, or did you blame the guy in the mirror?
It was so fast. I mean, it was the day of earnings. They were going to release earnings after the close, and it was about 3:40 in the afternoon, and I was watching my position, and somehow Yes.
It leaked early.
That? Yeah. Okay. Yes, it leaked early.
I remember this. I remember this earnings. Yep. We were all watching it. Yep. It got released early. They screwed up something on the website.
Yep. Oh, yeah.
And then all of a sudden, it just went, it went like a ship. I mean, like a rocket down, just meteor down to Earth. It just came so fast. And I was like, what's going on? I was like, there's nothing. Whatever. Buy one more call. I'll just add. Double down. Like just straight gambling, no idea, just not listen, just no plan, no risk management at all.
Who did you blame at that time though for that loss?
It was.
Did you blame the leaked news release?
No, I think I was like, what is going on? How does this happen? And I just took a look in the mirror and I said, dude, you gotta stop. This is bad. You cannot be doing this. With
Shape up.
No, I didn't. Yeah, no risk management or anything like that. No strategy, nothing. Just pure gambling.
Now, are you saying this in hindsight, or is this what you were telling yourself at that
time?
Moment
I was pretty angry. I think, what the heck? I can't. This is unfair. Blah blah. It's rigged. You hear all that stuff, and then.
Okay, so you didn't blame yourself then. You're blaming external forces. The point I'm trying to get at here is you're nobody, and this is not Roland, this is just everybody. You don't start to improve until you look at the person in the mirror, because I guarantee you this thing, if that had leaked and the market liked what it saw when it leaked and Roland's up a whole bunch of money, he ain't saying anything about, this is all rigged. This is all unfair. None of that's going to happen.
I would be saying, yeah, I'm right. I was right. Yeah.
He would have been perfectly fine. He would have been perfectly fine with that leaked earnings report. So, But that's really the major learning lesson for everybody, and myself included to this day. It's if I ever find myself, it was because I got stuck in a halt. No, you chose to trade a stock that you knew had already been halted or had a high likelihood of being halted. So, at the end of the day, it's always the person in the mirror's fault. 99.9% of the time. Sure, there can be random events like 9/11 that happens out of nowhere. Okay, fine. That's just a bogus event. But majority of the time, yeah, it's the person in the mirror. So looking at the time, we got to start to kind of fast forward, Roland. So what are you doing at this moment in time? Are you still focused on options? Are you trading stocks? What is your current trading look like at this junction in time?
I guess I kind of dabbled in a lot of stuff, and then I actually right after those huge losses and after I got the house, I purchased CTU, and I just went into it. I just spent any free time I had after work or on the weekends just going through all the lessons and stuff like that. And then I was like, okay, I understand now risk management, stop losses, entries, exits, planning your trade, all that stuff necessary to to be a successful trader that you have to work on.
So did you get more out of that than all that free stuff you'd been going over when you just felt getting torn in all sorts of directions?
And just a lesson plan, plus all the webinars and stuff like that, going through trades and saying, okay, I was in the webinars and you'd say, okay, what would you do here? Do you, short or buy? Okay, I'll give you a hint or something like that. But, if you bought, put your stop loss in. Okay, no going back now. And just doing all that. And I've been trading. Now I work construction, so I work 6 days a week. So I don't really have any time to trade right now during the summer. But during the winter, I was experimenting with futures on Thinkorswim, and that's kind of where I see myself going, is swing trading futures.
And what particularly about futures kind of appeals to you? Because futures, for your new listeners out there, futures actually trade for 23 hours a day, 23 hours a day for 5 days a week. Forex has kind of the same type of hours for the most part. It's closer to 24 hours though. So what about futures kind of really appeals to you that's where you think your focus is at?
That's exactly it. Was it 23 hours a day open? So I would come out of work and I would have time to look at charts, gold, oil, silver, commodities like that, and I could trade them when the rest of the market was closed. So at like 6:30, 7 o'clock, I could actually play swings or get ready for the next day when the market opened at 4 in the morning.
Gotcha. So I guess first off, I want to tell you those markets are absolutely awesome, especially when they're moving and grooving. They're great. Just be aware though, you kind of learned about kind of the power of leverage with options. Futures are like a whole nother ball game where like every penny up and down in oil is $10. 10 cents is $100 loss. So just be careful if you're going to be starting it with kind of a smaller account. And I guess a better question is asked, what kind of time frame are you thinking for your swings? Are you looking at the hourly, the daily? Because that's going to kind of really dictate how big your stops have to be. So I just want to give you kind of fair warning, because I've traded in futures before and I wasn't sure if you're going to say I'll 5-minute trades or something like that after hours when the market's quiet or is open. But you said swing trading. So what exactly is the time frame you're thinking you're going to trade on?
I was looking at more the 4-hour chart and the daily as my entries, just to plan my entries and exits. Just looking for patterns, bull flags, bear pennants, support, resistance, channels, and basically just getting a plan in place, buy on support, have my stop loss, and always having that 3-to-1 risk reward ratio.
Set it and forget it.
And that's how I would only trade one contract at a time. So at the time, I had started with a $25,000 account. And then I just kept adding money to it, but I wasn't really trading. Just all the money I had saved. So I think I had a $40,000 account when I started trading futures like more seriously.
What is the time frame on this? Like when was this back in the winter time?
This was actually, I would say October of last year through.
Okay, so you have traded this strategy though. This is not some like theoretical thing. Have you've put all this? You've
Yes.
been trading this way already. Okay, so and I'm assuming it had been working. If you plan on going back to it once work slows down, is that a
Yes,
logical
for sure.
conclusion on my part?
Just looking at patterns. My I guess I don't know if I should say favorite, but it's just I just when I look at a chart now, my chart vision is so much. It's so I guess so good from where I've come from. I can spot bull flags and support and resistance and stuff like that, and I can come up with a trade plan that works for me, that I feel comfortable with, and I can implement the trade with a plan, having targets in place, and always locking in profits when I can. And then if I'm stopped out, I'm stopped out, and I look for another trade.
Very nice. Now, I just want to, because I'm fascinated by this. So you started trading in October of 2016 with the futures
more
and
or less,
swinging, right? And then things were progressing nicely. And then the only thing that pretty much shut down your trading was, it's not like you blew up your account. The only thing that shut it down was you're just crazy busy at your 9 to 5 job, right?
It's like a 7 to 5 job, but yeah.
Okay.
So I would do that, and I would just kind of check on it. I was about 85% trading mobile on my phone, which is pretty tough to do. You can't. It's like I watch one of your YouTube videos on trading on your phone. If you want to be like a scalper or something, it's almost impossible to do it because it's just the risk is so high.
Definitely.
So yeah, basically that, and then so basically this year I'm looking at my Thinkorswim account right now. Nothing crazy gains, but I am in the green. I stopped trading. I think in like May I kind of tapered off just because work has been so hectic. But yeah,
The busy season.
Trying to find. Oh, here we go. Overall totals: $5,599.69, and that was for like 4 or 5 months till May, from January to May. So,
And you were doing that on a $40,000
Yeah.
account, right? From where you started, just about that. So you made 13% trading, kind of part time. Clay, correct me if I'm wrong. If you go to the bank and say I want 13% of my money in a couple of months, they're gonna look at you like you're crazy and probably call security on you, right?
Oh, you stole my thunder. I was gonna be like, if you as a listener out there is thinking, oh, 13%, 13. I saw some dude on Instagram. He made like 80%, and he's up. Listen, if that's your mindset, they've got you hook, line, and sinker. They've got you hook, line, and sinker, and they are about to sell you beachfront, oceanfront property in Wyoming. Okay, that's where you're headed. And Ches, you jerk. To put 13% in context, like you said, I'd encourage you, go down to your local bank, walk up to the register and be like, excuse me, ma'am, I'd like 13% on $40,000 in the next 5 months. They will call security after you get sprayed in the face with mace. So, I mean, very well done. That's 13% is... that's awesome, man.
It's actually closer to 14%, but yeah, regardless of if it being 13 or 14, being a part-time and swing trading futures, which I need to emphasize to you guys out there, Roland, you totally set yourself up for success in your preparation as well. Not only with your chart vision, but kind of coming in well-armed with your capital and totally kind of focusing on that risk thing and kind of letting your positions work for you. Now, this is just me being personally curious, what for a stop loss, obviously it has to be logical on the chart for you. What kind of losers are you is it like, are you risking $1,000 on some of your positions, or is it $500? Because I feel like, swing trading, you got to have wide stops regardless of if it's one contract or more. But I'm like super impressed right now, because like when I gave you that fair warning about swing trading and futures, you like blew my whole argument out of the water, because you're like, yeah, I've been saving up. I've literally just put my head down and just kind of been piling money into this thing and just been trading exactly how I want to trade. So what kind of, like, when you stop out, how bad is the damage? Because obviously you are totally a great testament to kind of risk versus reward being up 14% in the 5-6 months. And actually you're in a good position, because the summer months are generally super boring. Sometimes they're busy during the day, but more often than not, the winter months are where it's active. So you're probably doing yourself a service by really making a bunch of money in construction in the summer and then kind of trading in the winter too.
I guess back to the I used all the proceeds I guess that I saved and plus some money from trading to buy another 6-family apartment building. So now
a man after my own heart, all about investing into dirt. I love it.
Yep.
Buy up that dirt, man.
So basically now I'm just I haven't really been trading that much, but I want to get into it, back into it, and get back into what I was doing before. So basically, I guess back to the stops and stuff. I would just look for, because I know it's futures. I don't know if that's to do anything to do, but I would just look for really strong levels of support, really strong levels of resistance, where I see it come up, it hits it. Okay, we're coming up to, say, $45 on oil or something like that. Okay, it comes back down. It goes to 44 or something like that. The grandma numbers, right? So, and it just kind of bounces in there. And I would just look to short at 45 and try to cover at 44 or something like that, and just have that 3-to-1 risk reward already in place. And then if it comes up and it hits 45 20 or something like that, I'd be out, and that would be it, and I'd just move on and try to look for something else. So my losses were around $100. I think I try to cap it. As I'm looking at my statement right now, I see a lot of $100 losses and $75 losses.
I am just super impressed with you, because you pretty much you're pretty much risking $100 to make $1,000. That is just absolutely fantastic risk management, and it's pretty much. And I'd venture to say, when you're wrong, you're just wrong quick, and then you just wait for the next trade to set up.
Yeah, I was gonna love it. The one word that stuck out in my mind, and we're all speaking over each other because the adrenaline is flowing, is you say, I see a lot of $75 and $100 losses, a lot of, and yet here's this guy that grew his account by 14% with a lot of $75 and $100 losses, which swings back to Chez's point. Yeah, when you're risking $100 to make potentially $1,000, well, you can absorb a lot of $100 losses. And
10, 11, 12 losses, all wiped away with one winner, just one.
And
I'm getting heated. I'm sorry.
Yeah, I love it. I love how, you see, to you said it just in passing, but that a lot of stuck out like a sore thumb in a good way when you're making that statement. So, what's the trick, man? How do you take so many losses but not get discouraged?
I actually can't. I think a lot of times I'm like, how am I losing all the time? It does kind of get frustrating, I guess, but you just have to stick to your strategy, because all it takes is that one, and you just kind of have a trailing stop, and you just kind of keep up with it. Let's say like trailing stop like 15 cents off of where it is now, and you just keep going like that and just keep following it. And I think the best trade I had was actually on OJ, orange juice futures, and I was long that on what I found on the charts to be a significant area of support. So I've actually scaled in to that. I bought 3, which I may have, that's a lot of money at stake, especially on orange juice, but it's so volatile. But I had scaled in over, $10, and I was waiting for it to come into this significant support level that I see on the chart that I mapped out. And it ended up, and I knew where my loss was going to be already. I was already risking, I think I was risking about $500, and it ended up bouncing. I had a really nice amount, and I took profits along the way, and I ended up making out, as I'm looking at the trade right now, $3,270 over, I think it was about 3 days. So
that,
right.
And you were risking $500, and I love how you knew what the loss was going to be. So that must be your trick. You predetermine what the loss is, and in your heart of hearts, you're like, yeah, I am okay with losing that amount. You're not kidding yourself. You're not lying to yourself. You must truly be, yeah, if it hits that, I'm okay losing it,
right,
and I'll just move on to the next trade. Yeah, it's frustrating. Yeah, it's annoying. But I love the psychology of loss. I love, and I'm, just even for my own self, but this just reiterates, what we preach and what other people have said. And, what makes sense is if you truly are okay with losing an amount of money, then you will lose that amount of money. You'll take the stop and move on. So, but yeah, another great trade on your part. So that's some good stuff. And I love how you're basically taking profits and you're rolling this into real estate type stuff, because as a fellow real estate investor myself, I'm all for investing in the dirt, right? I mean, McDonald's has it figured out amongst any company out there. They are not in the hamburger business. They're in the dirt business. Real estate, massively. So I like that. I like where you're headed. And I can tell you're an engineer. You really do have a systematic system in place, and you're not rushing things. And to Chez's point, you're probably doing yourself a service, because summer is kind of bleh anyways. So, why throw yourself into
right. and
more volatile, choppy sessions? So, Chez, I mean, this man's got a system in place, right? He's an engineer, right?
Absolutely, he's got a system, but it's just it's just a good turnaround story in the sense of you went from literally, I think Apple's a good company, and buying as many calls, maxing out his paper account and stuff like that, to swing trading futures, which is inherently difficult, and it takes a good amount of preparation, and it definitely takes a process. And just absolutely, another one of your cherry-picked engineer buddies who just has gotten, figured it out, and it's a process. And the big thing that stands out to me, because I struggle with it, and I will always struggle with it, is not taking those losses personally. And, just like Roland said, it's totally frustrating, but you nailed it, Clay, when you're like, he says, I had a lot of $75 and $100 losses, but the thing is, the winners he does score always pay for those losers. So yeah, this was an awesome podcast.
And I mean, I'm not trying to be a jerk, but I mean, now knowing where you are, Roland, I feel fine saying this because you've come such a long way. But to Chez's point, when you were just kind of like, oh, I think that looks good, or oh, Facebook, they have a website, oh yeah, Verizon has a phone. I mean, you were like a freaking chicken with your head cut off, running around.
Yep.
It must have driven you insane, because, and engineering, sure, we keep making a joke of it, but I know the engineering mind is you want to have structure. You want to have a system. You want to have, okay, do this, and then you got to do that because that's logical, and that'll accomplish that because this is going on, and then that'll make sure that happens. So you must have just been so frustrated with yourself when you were literally a chicken with your head cut off. So you have come a long way, and there was a really, I'm not trying to be mean, but, and I say this because I started the same way, so I will say it, but I started off ultra pathetic. You started off ultra pathetic, not knowing about commissions, paying $15. There was our bonding moment right there, because I did the same exact thing with commissions. I mean, boy, oh boy, did you have a pathetic start just like I did, but well done to you, coming across. I mean, just Chez, he came a long way from the beginning of this interview to where we're at now. Would you agree with that?
Full circle, absolutely.
Yeah. If we were in person right now, Roland, I would be hugging. My face would be buried in your bosom, and I would just be weeping tears of just.
This is why
joy.
no guests volunteer for the podcast. This is exactly why.
Yeah, that's a good point, Chez. That is a good point. So, anyways, Chez, give the man your time machine, will you?
I will. So, Roland, if you could borrow my time machine, go back and give yourself one piece of advice that doesn't include buying Apple or Google or whatever when it was a really low price, what would that one piece of advice be?
Ooh, might have to think about this one. One piece of advice. I know you guys ask this question to everybody.
I was wondering, I'm like, you're not the first person that gets stumped. It's when, I understand. It's like a hot light shining down on you right now.
Yeah, it is. It's a hot light. I do have the light over my head. Boy, one piece of advice. Seriously, I guess. I don't know. I think the biggest two words is risk management. I feel like I had no risk management back then. So if I had to give myself advice, it would just be, you can, I guess, dip your toe in the water, but,
I think you gave the answer.
Yeah.
Risk management.
That's all it is.
Like you would literally
like
get a bumper sticker on and stick it on your car.
Yeah.
Risk management. That answers the question.
Right.
It's only two words, but that says a whole lot. That summarizes that's a good bit of advice that you'd want to give yourself. So I will accept that answer. Ches, is that an acceptable answer?
Yeah, I mean it's hands down the most neglected thing when you are new to the market. You more so focus on how much can I make over how much am I going to lose. It's just yes, that's an absolutely totally valid piece of advice.
All right, now the questions get that much harder. So Roland, what is your favorite movie?
Ooh, favorite movie. Boy.
Pretty Woman.
Pretty Woman. I've never seen that.
You've Got Mail.
I don't know. I could be a real. I don't know. I saw The Big Short, and I've seen that a bunch of times. That's up there. But I think just a good old fashioned movie. Yeah, it's probably like Happy Gilmore or something funny. I don't know.
Yeah, you can't go wrong with that.
I don't know.
Happy Gilmore is a classic. That's a good one. I've watched it way too many times. Not recently. Maybe I'll have to kind of pull it up again. But what would you say is your favorite food and dessert?
Favorite food? I don't know. I love. I guess. These are tough questions.
Roland, you knew these questions were coming.
It's the hardest part of the podcast.
It really is. Because I'm not thinking about food. I'm thinking about trade and stuff. But boy,
steak.
Yeah, I'm trying to get off the whole red meat thing. I'm trying to eat more vegetables and stuff like that. Get more healthy. But I do like
broccoli.
Steak. Yeah, no, not broccoli.
Salad. Got it.
I would just say any sort of spicy chicken wing or something like that. Teriyaki.
Okay, I can
Jamaican
get behind
jerk or
that.
something like that. That's good.
I can get behind that. What about dessert?
Dessert, it's got to be strawberry ice cream.
All right, that's America too. All right,
can accept
acceptable. Acceptable. All right, finally, 3 words. I think I know what 2 of them will be, but these 3 words have to be what you would associate to describe a successful trader. So what would those 3 words be?
Preparation and risk management.
There you go. I thought it might have been learn risk management.
Yeah,
but
yeah.
I like preparation.
No.
Preparation
is definitely
preparation's
key.
better. No, you one up me.
Key.
Yeah. No, that's good stuff. So Roland, again, it is now 8:00 Eastern time. Is it dark by you in Connecticut?
Oh, it's dark out. Yeah.
Is it?
Yeah.
So I'm trying to think. We're going to turn this into a quick. What's astrolot? No, that's what's space and all that. What's that called? Astronomy.
Owned by NASA. Oh, okay.
Astronomy.
All right.
No, we're going to turn this into an astronomy class. So it is still light here, but that would be because I'm at the edge of the Eastern time zone, whereas you're at the beginning. So Ches, as our resident astronomer, is that right? Is that why it's still light here, even though it's the same time?
I'm thinking it has to do with where the sun sets, Clay, and if I'm correct here, it rises in the east, so closest to Roland, goes over your head, and then towards me in the west. So yes, that does make perfect sense, and apparently the Earth is revolving the correct way. So that's good. We've confirmed that the Earth is spinning correctly.
Good. All right. I just wanted to make sure because I don't like to assume because I'm not an astronomer like Ches, which will be a fun fact one day that Ches has a PhD in astronomy. But anyways, talk about a rabbit hole that means nothing. I guess the people that wanted to hear trading, they already bailed out of here, so I don't feel too bad talking about this. So it is dark in Connecticut. It is almost dark here in Michigan in the Eastern time zone, and Ches is in the beautiful sunshine out in Colorado. But Roland, thank you for taking time out of your night and hanging out. And would you ever come back and fill us in on things?
Yeah, I'd love to. I want to get back into. I mean, I am going to get back into this. This is like what I want to do. I love trading. I love the challenge. I don't know. It just feels like it comes after that learning curve. It just comes more natural.
Yeah. You got your system in place. Absolutely. That's what systems and procedures do for you. It makes things natural, aka efficient. So that makes total sense. So Roland, thank you again. And we will have to have you back at another time.
Okay, great guys. Look forward to it. Thanks for having me.
You bet. And for everybody else, before you go, I'm assuming you still listen through that whole astronomy discussion. Bless your heart for doing that. But if you're listening on YouTube, be sure to check out the rest of the channel. Click the like button on this one, and hopefully you ultimately decide to subscribe to the channel itself. If you're listening on iTunes or any of the other podcast players, subscribe. And especially on iTunes, if you could leave us a rating, that would be vastly appreciated, and that really does help us out. And then finally, if you're listening on the show notes page at claytrader.com, leave us a comment, click that share button, and we do read comments and would be happy to interact and answer any questions that you may have. So thank you again to Roland. Thank you to Ches, our astronomer and co-host, and thank all of you as listeners. We'll see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.